But I picked a small cap for the stock of the day. It's Wellnex Life, WNX. So it is a producer of health products that include pain relief, energy boosters, and sleep support. So it sells out of Coles, Woolies, and in pharmacies as well. Its shares are higher today by about 6.25% after saying it's reached its break-even point. Wellness Life says first half earnings and gross margins have improved, boosted by sales of its Pain Away product. The company is also expanding its distribution network in Australia. So let's get a view from my expert guests, Dean Fergie, Cyan Investment Management, Wellnex Life. Now, this is what we're hoping for in all of these unprofitable small cap companies. You know, that path to profitability, that break even is a real milestone.
Yeah, it is. So this is the old Wattle Health. It's been a pretty troubled business for a long time. They do products that you might think are pretty well sought after. So a bunch of effervescent tablets. There's like Wakey Wakey and 9090 to help you get energy or go to sleep at night, and then all the Pain Away products. It's kind of got me on a bit of a bad footing, this company. Like, their most recent announcement, I don't know, like, really pisses me off. You know, their first line is EBITDA improved by $2.4 million versus PCP. Okay, well, that's good, but it's like completely irrelevant. You've got to put it in context. So you have to go back. Last year, what did they do, in the first half of 2025? They did negative 7.5 million. So, to start an announcement by saying we've improved by 2.4, okay, that's fine, but you've still done a loss of $5 million. I find it really disingenuous, that kind of market narrative. I think it reeks of a company that's sort of trying to hide behind the true results of what they're doing. If they are saying that the company is at break even and is going to go forward on that basis, then that's great. But they're also saying that it's not definitive in terms of the statement if you read through it. So the company's pretty inexpensive. It's got a market cap of about $11 million. They spent a fortune trying to list on the AIM last year, which they did successfully, thinking it would be the solution to all their problems, and it hasn't been. Just for me, there's a lot of kind of corporate governance communication red flags for the business. It hasn't been profitable to date, so it's one that I quite clearly don't look very favourably upon.
That's a sell if I've ever heard one before. Luke,
Sorry.
Is there anything to salvage in that tear down that we just got from Dean?
No, probably not. I agree with that all. It's a sell for me too, Nadine. 11 mil market cap. There's also a bit of debt as well. I don't love debt for nano micro caps. It's always very expensive for these guys. It's 14% debt. I think there's four odd $million there. And the other one as well, they've got a $2.3 million loan with a former CEO. And the word former is the key there, because he's now left the business and he's demanding to be paid back. So they've had to come to a payment plan with the former CEO for money that, quite frankly, they don't have. And I think it'd be quite difficult to get their hands on. I say this a lot when I come on to Dean, but for these sorts of businesses where you are a brand, you theoretically own IP, the first thing I look at is gross margins. And you highlighted it in the intro. It's gone from 23% to 30%. That's good. That's the direction you want to see it go. But 30% is far too low. I mean, as I've said before in the past, bare minimum for me for these sorts of businesses where, you have a brand, you have IP, I want to see 50% plus. So it sort of falls down there. It's so hard because, when 70 cents of every dollar of revenue just goes into manufacturing product, and you have to continually manufacture more and more to grow sales, it just becomes such a big working capital drag that these small businesses can't keep up with. So I think this balance sheet's pretty ugly. I agree with everything Dean said on a governance point of view. And also, I fully agree with his thoughts on trying to dual list on the AIM. Some companies I can sort of see the rationale for a dual listing if you have operations primarily overseas, but best I can tell, these guys are mostly Aussie based. That Pain Away brand certainly is. So I didn't really get that one either. So sell for me as well. I think this is one where, on any sort of spike, any sort of good news, you're lightning and looking to exit.
Got it, guys. And honest opinions only. That's what we love about you. So Wellnex Life not getting any love today is the stock of the day.